Hello and good day, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlooks. Starting as usual with the North American markets coverage. Yesterday, the industrial Dow Jones went down with almost 10 points. The high-tech NASDAQ went down with 24. The Dixie Index is up to 95.30 from 95.25. Chicago Fed National Activity Index higher than previous yesterday. Initial jobless claims 3,000 weaker than the expectations at 278,000. Philadelphia Fed Manufacturing Survey worse than expected at minus 1.8. CB leading indicator month on month 0.2% better than the expectations. Yesterday, Fed Stanley Fischer's speech remarks were released, but had virtually no comments on monetary policy. He said that U.S. economy is approaching full employment and target inflation needs faster potential growth. Also, we had Fed official Lacker, who said that strong case for rate hike in June is up. Also, Mr. Dudley said that rate hike is very possible in June. He also said that the second quarter growth would be stronger than the first one. Hawkish Fed officials took the stage during the US trading session yesterday, allowing the Greenback to squeeze out a few more gains against its major rivals. Namely, USD Canadian dollar 30 pips up yesterday versus the Swissy 60 pips up, and versus the Japanese yen we had 30 pips down. These are the major movers yesterday. Today we have inflation data from Canada. So basically, everybody that is looking at the North American markets should be a little bit more focused on the loonie today. Also, we have some real estate property reports. Next week, we have on Thursday durable goods orders, which is one of the most volatile reports from the US. And in Canada on Wednesday, we have the interest rate decision. No changes expected there. And the statement, of course. Also, the G7 meeting starts today in Japan. Moving to the European markets, yesterday mining companies were dragging European equity indices lower. So the gloomy risk sentiment during the session was likely due to the commodities carnage. Airline companies were a major drag, and they pointed to skittish investor sentiment because of the missing Egypt air flight, which was pretty much found recently. The ECB meeting minutes yesterday, the ECB was basically congratulating itself because of the additional easing measures introduced by the central bank during the March 10th decision was finally having a positive impact. However, the ECB was also concerned that growth in the Eurozone was still being driven by domestic demand, and that inflation remained subdued and will likely remain subdued in the coming months, but noted that the economic developments in the Eurozone were, on an overall, pretty positive. Given all that, the European Central Bank thought that it was appropriate to maintain their current policy. Basically, the central bank pretty much reiterated everything that was said in the April 21st press conference, which is probably why Euro pairs didn't react that much. The minutes did say, however, that the ECB defended itself from public criticism, which was delivered by a member state, as well as hinting that further easing moves were unlikely in the near future because the ECB is more focused on the implementation of the additional measures that had been decided, which was on the 10th of March this year. This morning, German PPI came out missing forecasts, and we are currently waiting for the European current accounts reports for the month of March, of course. Moving to the UK, yesterday the FTSE 100 was down almost by 40 points, closed at 6,070. The 10-year gilt yields closed at 1.48% yesterday. We had Very positive retail sales reports yesterday all over. Basically, very good numbers appeared on yearly reports and monthly reports, of course, excluding fuel, including fuel. Everything came out better than the expectations, or at least meeting the targets. The British pound is no longer the worst performing currency of this year. Sterling is getting more and more boost as we are nearer to the referendum, the Brexit referendum. Retail sales data also show that this segment of the economy performed far better than the analysts forecasted. Despite all that, the sterling was pretty much unchanged against its major rivals, following a big lead from yesterday. We had the MPC member, Mr. Vlieghe, said in a speech that the MPC will need strong data showing that the economy is recovering at a steady pace. Without such data, the Bank of England will have to introduce additional stimulus measures. This is what Mr. Vlieghe said. On the markets, on the charts, we had the pound Aussie 38 pips down yesterday with over 200 pips range. Going sideways pretty much today, versus the loonie 90 pips up yesterday, 210 range. Again, going pretty much sideways today. And versus the other Condor currency, the Kiwi, closed as a doji, but again over 215 pips range yesterday. Asian markets, basically the Nikkei was again about 200 points down yesterday. Nothing major there. On Sunday, we have the adjusted merchandise trade balance reports and the merchandise trade balance reports. Also, we have the exports and imports reports also coming in. On the commodities sector, the S&P 500 index had a range of 22 points yesterday, currently at about 20.45. Natural gas storage reports yesterday. Storage in the US in the week ended May 13 rose by 73 billion British thermal units compared to expectations for a gain of 78. Futures held near 4 weeks low in North America trade. The oil prices also rose in early trading today as a turmoil in Nigeria shale bankruptcies in the United States and crisis in Venezuela also contributed to tightening supplies. Also, we have a militant activity in the oil-rich Niger Delta. Was taking out some 500,000 barrels per day of crude oil production from other companies in Nigeria, pushing oil output in Africa's largest producing nation to more than 22-year lows. In North America, the light crude output has fallen by 8.79 million barrels per day, down from a peak of more than 9.6 million last year as a wave of bankruptcies hits producers. In Canada, production has also been cut as wildfires force closures of around 1 million barrels in daily production, although output is gradually returning. In South America, output from OPEC member Venezuela is also stalling its state-owned oil company, which is struggling with a case of squeeze amid a deep political and economic crisis. The WTI had $2.30 range up to 49.15, which is the price pretty much now. Gold futures plunged to a 3-week low in North America trade on Thursday. It had a range of $18. However, the current price is $12.53 currently. That was pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye from me.